I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, natural resource specialist at the Oxford Club. His website, InvestmentU.com. Welcome to the show, Sean, and thanks for speaking to us during your vacation.
Hey, thanks. No, it's my pleasure.
Gold has been on a tear lately, but over the last few weeks, it has been going down. Is that going to continue?
Yes. I think gold probably has another 5% lower. We actually saw a blow off top just over a week ago from when you and I are speaking, and so that really is, problematic. We had a great run in gold. These things never go in a straight line, so I'd expect things to move that 5% lower down into the Fed meeting in June, and I think people are pricing in a lot of fear about gold, fear that the Fed might raise rates. I think those fears are overblown. We can speak more about the Fed in just a bit, but really gold has a lot of other good fundamentals going for it. So this is actually great if you want to get more gold mining companies, right? Because no one picked up enough the first time around. And so everybody's saying, oh, I wish. So we'll see what happens. Maybe if we're especially good and lucky, gold might pull back more than that 5%, which is fine with me because it really put in a big, strong, long-term bottom at the end of last year, beginning of this year. And so, when that kind of thing happens, and the general trend is higher, which it is, then pullbacks can be bought. And so that's what I would look to do, especially in select miners that are leveraged to the price of gold quite extraordinarily. I mean, they had great run-ups, 100% run-ups, sometimes even more. So naturally, we'll see the air leak out of them quite a bit. So those people who didn't have a chance to pick them up the first time around, maybe they'll get that chance.
Is this just part of the natural market progression? You're going to have a bit of a correction?
Yeah. I mean, that's all I'm really looking for. I know that we've had some people come out and say, okay, this is it. This is the top. But those are the same people who say the market is totally manipulated anyway. And if you believe, seriously, that the market is completely manipulated, why are you in the market in the first place? I do think that there are people who like to push the market around, and certainly we have seen some big trading houses get caught actually manipulating the price of gold, the price of silver, stuff like that. But really, those are kind of short-term moves in a longer-term trend. The big trends I would be watching in gold right now is it had a 4.5-year bear market, right? And so gold is a cyclical beast. Everyone understands this. So we had that big down cycle. Now we should see 5 to 7 years of an up cycle if gold performs the way that it normally does. And we've only seen the first 6 months of that. So, things can't go in a straight line. So we've had a big move up. Now we'll have a pullback for a bit. Let gold regain its breath, and stuff like that. And then things should really head higher once again, and then of course it'll hit some other peak, and then things will sell off, and on and on. These kinds of things happen, but the big trend in up right now, the big trend in gold right now is up.
I've heard some incredible numbers: $5,000 an ounce, $10,000 an ounce. Will we ever hit something like that?
Well, we certainly could. I mean, it all depends on if the central banks of the world lose control of the thread they're actually spinning, because they're pushing into negative interest rates, which we really haven't had experience with before. And how does that alter the equation? We don't know. There are unknowns here. However, what I would look for my next big target would be around 1450, and I think that's the next time we'll see gold pause. But longer term, say over the course of 18 months, 2 years, I would look at $1,900 gold. I definitely think that's in the cards.
Do you think some people don't take estimates like that seriously?
Oh, sure. And look, I mean, I do that prognostication by, you know, having lines on the chart and like seeing where they go and like stuff like that. And the problem with chart analysis, and I think I say this every time I'm on your show, so people can just say the words along with me, is every sunken ship has a chart. Charts don't always work. But I'm using that as a target for me just because I know gold is in a big cyclical bull market, and I have to have some target to work with, right? So that's the one that I'm currently working with. That does not mean that we have to get there. That doesn't mean we have to stop there. Maybe the guys who are talking about $5,000 gold, maybe they're right. You know, I mean, I'm not the one to say who is and who isn't right here. I just play the trends as I see them, and the trends are up, definitely.
How big of an influence are countries like India, China, and Russia that have been stocking up on gold the last 5 years?
Yeah, well, that's a huge thing. An interesting thing just came out, though, which is Venezuela is selling gold like there's no tomorrow because their economy is crashing, right? It's supposed to shrink by something like 5 to 8% this quarter. It's like horrific. And so what they're doing is they're selling off their gold supplies. They actually did a lot of it in the last quarter, and yet despite the fact that they sold off a lot of gold in the last quarter, what did the price of gold do? It just absorbed that gold coming in from Venezuela and kept moving higher. So as a group, I would say the central banks have a big influence on the price of things like gold. But individually, you know, you just can't pick out one individual country and say, okay, they're doing this, therefore this will happen in gold. It's really more of a group thing because, you know, these are large markets, there are large forces at work, there are large buyers, large sellers, and all these things have to balance out. But now it seems we have, at least in the longer term, more buyers than we have sellers.
Does Venezuela produce any gold of its own?
Yes, it does. Oh, gosh, God, we could talk about that for a while. There's actually a beautiful gold mine there that no one's using because as it was being developed, you know, and it was getting closer and closer to production, Venezuela came in. Excuse me. I have a cold on top of everything else. Venezuela came in and said, no, you're really going to have to give us way more of the gold that comes out of that mine, totally ruining the company that was doing it. So Venezuela does produce gold, not nearly as much as it should, not nearly as much as it could, if they just do a more market-based system and stop being so grabby, you know? Now, I don't know if, like, their government will collapse. I think many people expect it to. And I don't know what happens after that, what comes after that. But at some point, Venezuela will get its act together, you know, whether they have a new market-based, more capitalist-friendly system and, like, stuff like that. And then they'll start exporting and, like, mining more gold. For now, they're just exporting gold that they actually have in stockpiles, gold which they will never see again, right? And so that's kind of a one-time thing. But they'll still be doing it this quarter. We know because they still have gold to sell. They're still in a crisis, and they sold gold in the last quarter. So they'll do that probably for as long as they have gold to do. One effect of this, of course, is it undermines their currency even more than it already is. And their currency is a joke. So that makes it more of a joke. And so you know, that's not good news for the people living in Venezuela. Certainly my heart goes out to them. Certainly I hope things straighten out for those fine people and things actually work out. But now it looks like more pain than not for Venezuela, and they'll sell all the gold they can actually get their hands on.
Well, I know they have a chronic shortage of toilet paper, and the country is so broke it can't afford the paper to print more money.
Yeah, and they also give people more and more time off during the week because they can't afford to keep the lights on. I mean, first they said, okay, everybody's going to work a 4-day week. And they said, okay, everybody's going to work a 3-day week. At some point, nobody's going to come into the office at all. I'm not sure what happens then.
Yeah.
And this is strange because really it is an oil giant, right? I mean, everybody recognizes they have an embarrassment of riches when it comes to oil wealth. and yet they can't get their act together. It's just really, really sad.
Well, that's what happens when you have a communist country whose slogan, I'm sure, is "Eat the Rich."
Well, they certainly have. And now what's left?
We'll have more with Sean Brodrick right after the break.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Sean Brodrick. Sean, what's happening with oil right now?
Oil is actually looking good. I mean, we had some U.S. inventory numbers that came out that were supportive of oil. Globally, there are still forces out there that could be bearish, but we really haven't seen them come into play. Now, a cynical person will tell you this is because the market is manipulated. I don't know. It just seems China is buying all the oil that it can lay its hands on, which actually would tend to tell you that the Chinese economy is stronger than some people believe. And we have heard threats from both Iran and Saudi Arabia that they're going to open up the taps even more than they will. Libya had some massive problems because two sides were shooting at each other. Those seem to be worked out. Nigeria had to take oil off the market because, they're just sitting on a powder keg of political instability. But that might work out too. So there are forces that could push oil prices lower, but it's not really happening right now. We are seeing oil break out to 6-month highs. So until things turn around, prices will go higher. Will this be enough? And this is the question everyone should be having on the front of their minds. Will this be enough to save, say, some oil company you think is undervalued, so maybe you want to buy the shares now because you think the price of oil is going higher and the stock has really been under pressure, and so this is the kind of thing that could really send those shares higher. That's the question we all have to wrestle with, because even though we're seeing higher oil prices, it's not going to be enough to save some of the really debt-laden stocks that are out there working in the North American fields. They really took on too much debt when oil prices were high, and now they just can't service it. Whether oil goes to 60 or even $70 a barrel, it's not going to be enough for them. So I'd be very careful if I was, looking for the ultimate bargains in the oil sector right now. Some of those ultimate bargains are really going to go away. You have to be very careful. You want to look for a company that has a strong, underlying a system of it's balanced between how much cash it has, how much debt it has, how much cash it has coming in over the transom. Because if they can't make money at, say, $40 a barrel, do you really want to buy them? Because prices could go back down. If things in, say, Nigeria and stuff like that straighten out, then the price will go back down. So even though you're buying something that you think is super cheap, it just might really be overpriced. So I would wait and just buy the pullbacks. I mean, certainly things in oil can be bought. I think there are some great companies in there. I know because I've recommended them to subscribers of my Oxford Resource Explorer. And so there is some good stuff you can pick up there because people are still frightened and all that stuff. But just don't be too greedy. That would be my recommendation on that.
Saudi Arabia right now is so broke that it's giving out IOUs on its debt. Is that why they would pump more oil? Even though it seems counterintuitive.
That is the basic thing. That is making people sit up and take notice. What the Saudis are doing, laying people off, the IOU situation. Really, they have to pump more oil. They say they can. They say they can pump an extra 1 million barrels per day. We'll see what they do. Then they'll have to find the ships to carry it, of course. And maybe what you want to be in the shipping business, right? Now, that really has been a trade that's worked sometimes in, say, the past 6 months, and sometimes it hasn't. So, again, you have to be careful because that's a hard market for me to read. I think there are people who are probably better at it than I am. But, again, I mean, if all these countries around the world are going to be pumping more oil, and especially if there is a global recovery, or I should say, if the global recovery, which has been stuck in second gear for so long, if it actually shifts into a higher gear, then then those like oil tanker fleets will be more busy than they can possibly imagine. And so that would be a really good way to play it. But right now, people don't know, they're worried, and so those stocks can get hammered lower.
It's interesting. Somebody at the Fed said we plan to hike rates at least 3 times this year, but no real evidence that they'll do it.
Right. Well, I actually wrote a long article about this for the non-dollar report, which you can read at nondollarreport.com. And just speaking about the history of the Fed, you know, they like misstate what they're doing so much, no one should believe good morning from them. But even if they do hike, say, 2 times, which I think is what most market watchers are probably expecting at this point, it'll still be below 1%. I mean, that's what the Fed benchmark rate will be. It'll still be low. And so that's still a very easy money environment. So we're having a lot of fear being priced into the market right now that may not be justified. And so I see that as an opportunity. That actually doesn't scare me. And like nothing can run up, you know, in a straight line. And it seems like stocks are actually getting used to the idea that the Fed might raise rates and it won't be catastrophe. Next to follow will probably be gold. And so I would look for that to happen. And, but when the Fed finally makes an announcement in June, I mean, I can't predict whether they will do, a hike in June or wait till the next month or not. But I think that the market will find its fear going away simply because it's not as bad as all that.
Well, if they go up 0.25 of a percent, that's not going to change the world for most people.
Right, exactly.
It also sends a positive message, I would think.
Yeah. I mean, it means they think that the economy is strong enough, and there have been good things happening in the economy. We saw new home sales in the U.S., you know, rocket higher. It was like the largest surge in something like 29 months. There are good things about the economy. There's also weakness, though, especially the fact that it's a global interconnected economy, and so we just have to watch what really happens there because, you know, weakness in one part of the globe can really weigh on us. We know that the Fed has been watching this now. Do they think things have improved enough globally that they can raise rates anyway? That's really the question I think that's on everyone's minds there.
I think, of course, when you have Europe with negative interest rates and Japan with negative interest rates, wouldn't you see a big inflow of money to the U.S. where you can actually make money on a bank account?
Oh, yes. Well, we've seen that money flow in more than one way. Not only into U.S. bonds, but also into U.S. real estate. I mean, money, because they can't make it in the bank over there, right? So they bring it over here and they buy real estate. But, like, I'm going to tell anything you don't know because you're in Canada and you're seeing people show up with suitcases of money to do the same thing. I have to go, actually, but it's been great speaking to you and all the people who, like, listen to you. So thanks very much.
Sean, we'll chat with you 2 weeks from now at the same time.
Sounds great. Thank you, and have a great one.
Have a great vacation.
Bye-bye.
My guest has been Sean Brodrick, natural resource specialist at the Oxford Club. His website, investmentu.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.